Good afternoon, this is Melissa with the StockSwoosh.com, and today I'm actually reviewing, to many of yours amazement and shock, a bullish gap, which is not my thing, but someone asked me about it in the room today. I took a look at it this morning pre-market, and they wanted to look at it as a fade. I said, don't fade this. This is a bullish gap, and it's actually what I call a corrective gap, meaning it's going to continue in the trend of the gap, which is up. And someone asked me about it and they wanted to fade it. It's so interesting. I prefer to play short gaps. That's what I do. That's the only thing I've been doing for the last year and a half, 2 years really. Every once in a blue moon I'll play a long gap. I didn't do this today. I really, really, really have become so good at reading gaps. I actually think you could take my class and learn how to read gaps in every which way but loose. The thing is that once you learn how to read gaps, you know how to read them. And it doesn't matter what they do, you can read them correctly once you know what's going on in the chart. That's the one specific detailed thing in my structure that helps people see what's going on in the chart. And I will be honest with you, it is not normal. It is a different way of looking at things. That's why what I have is so special. That's why my class is so special. A couple people said that to me actually last weekend in the class. They said, oh, this is not what I thought. And I said, that's right, it's different. This stock had a clue that the chart was not going lower when it gapped down here in December and had a big monster bar. Now, this was a bearish gap that failed on the day. I actually had watched this day. It didn't work right as a short. But I didn't buy it. But that was kind of a clue that the chart didn't want to go down. You know, if you looked back here and said, what happened with this? It was a bearish gap that failed. Was the chart going to continue down lower? Yes. Did it? Yes, it came back in on itself. It had earnings out, and it could have come back down in here and gapped down, but it didn't. Okay, instead it gapped up. Now, if the gap had gapped here, it would have not been along. If it had gapped here, it would have been not been along. It would have been caught in between these moving averages. Who knows where it would have gone first, but it would have been stuck. Or here it would have been stuck. When it opened up this morning, and actually opened around 30, it was trading around 33.10, and somebody wanted to fade it. They said this is a resistance. It's a short end of the resistance. And I said, no, it's a bullish gap. Don't short this. Now, what did it do? It opened up, ran like the dickens down. Hold on, I'll show you. I mean, it just fell off the face of the planet hard. I said, watch it. You'll know in the first 5 minutes what it's going to do if it does a reverse swoosh. Here's what it did. It opened up here at 33. It opened exactly at the whole number. Look at that. I didn't even notice that till now. Opened at the whole number, ran up to 33.10, which I think was one of the pre-market highs. And you could have shorted this right here under 32.85 and then taken it in. I would never have done that. Why? Because the gap was a corrective gap. It was a bullish gap, so therefore you don't short it. If you did this aggressively, it had a 10-cent spread in the morning. At one point it was 40 cents or something crazy. This is a wild banshee this morning. But the reality was the first trade here would have been 35-cent risk. It actually had a good risk to reward. If you got out in here, it dropped $2. So you would have made like 7 times the risk. But what happened? I watched it. I actually watched this trade. I wasn't in anything the first thing this morning. This bar blew up out of nowhere. It was like all this buying came in and scooped everybody up out of the planet. And this scoop happened. It was a huge volume. And if you were in this short and didn't get out, you just lost all this profit. It scooped you up into $1. $1 in here. It scooped up. Look at that. So if you were short this and you didn't have bar by bar with a stop, actually if you had the stop here, you would have been taken out. Why would you have known to even get out of this or press the button quickly? This happened so fast you had no time to get out if you didn't have a stop in. By the way, I saw it trading. I saw it do it. And that's what happens when you decide, if you decide to trade against the trend on the daily chart, which in this case today was bullish because of the gap, then, you know, count on anything happening at any time to scoop you up and scoop you in if you're playing against the trend. And here was a great example. This thing happened so fast you had no time to cover your short. You didn't even have time to blink. I wouldn't even have had time to cover a short if I was in this short, which I wasn't. And I'm fast in the trigger. I don't know anybody faster than me with my hotkeys. This scooped you up and scooped everybody out and said, poof, and that was it. You had no time. It was a dollar bar. So if you didn't know this was a long before this, you certainly should have here. First of all, the gap was a bullish gap. And if you didn't know it was a long, you had to recognize this bar. This is not covering, this is buying, this is everything. And then it tried to go down lower, couldn't, picked itself up here again. Set up right here. You could have bought it. Stop under 31.75, 25 cent stop, bought it at 32, 25 cent stop. Hit over 32, at a reversal time, triggered at 940. 940 is a reversal time, ran up in here, and you know what you did? And as soon as this tried to come down and it went 2 pennies under 32, right back into this base, you would put the stop immediately under 31.98. You would have been right at break even with your entry here. It did a sandwich here in the red bar sandwich. You would have kept the stop. Look, this is a base. The stop would have been right under 31.98 plus the spread, which actually was 10 cents. You would have had to put the stop at like 31.88, 31.85. Just to be safe, and then you would have been taken off, and that was it. That was the only entry. This was the only proper long entry in the stock today with any risk to reward. Nothing else makes any sense. Even this makes no sense. It's at a bad time. The stop's too big. You don't know if this is going to keep coming in after it did this crazy thing. It could have come down in harder again and then bounced up. That's what these longs do. That's why this happens. Look. It's another reason I like to play shorts instead better. They don't do tails like this. Look at this tail on this daily chart. Look. Look at that. That's where it opened, and that was the move down this morning. Look at that tail. This is why I just prefer trading shorts. This is like a monster. So that was the long entry. I don't do longs, but I can see the entries as well as I can see my entries on my shorts. I know how to trade gaps, and I'm very good at spotting the entries, but that was it. And you would have protected yourself immediately after the sandwich by putting the stop right back at your price, plus the spread. So you really wouldn't have lost in it if it had failed. This is risky. This is aggressive. You would have had to have 100% conviction in the long, which I did. I said it was, don't anybody fade this. If you did this, was super crazy, and you got hurt here. If you were up, do you want to lose $1? There goes all your risk to reward. So you made 2 or 3 to 1 if you didn't get out down here. Now, how would you have known to get out down here? Well, if you're going to play it as a short, you have to have all your targets. But I got to say, I thought 31 was the target. I thought the 200 period moving average, you know what the target was? Really nice bounce into the top of this bar here. 31.31. This bar here. 31.32 is the close of this bar here. This bar here, 31.16. All of these bars in here. Right in here. Do you see this? The top of this guy. Everything in here. It just went, it opened here and it went doo. And it went right on top of these people, and that was it. It wasn't 31 to the penny. It was this area right here, the top of the green bar here, the close of this green bar here, and this green bar here. Look at that. I mean, this was really, I mean, the buying that came in, it came in right on the top of that number, and it came in so hard that in 60 seconds, this bar happened. So 60 seconds. In 60 seconds, this stock ran $1. Now this stock could trade $3-4 on the day, but that's still a 30% move that the stock would happen in 60 seconds. So that's power. That's why that just wasn't short covering. Incredible, incredible, incredible move. So we watched this thing trade. I saw it, and I think everybody was like, just couldn't believe that I called it as a long, and then that's what it did. I did say the first target was 34. 33.78, 34, then I think I said 34.25, 34.50. It went all the way up and past $35. The highest up here was 35.30. Look at that. There it is. The top of this tail's right in here. The low of this tail right in here. What a beautiful chart today. If you like this and had conviction to do it long, that was the entry down in there at the reversal time after that big, huge monster bar. And you would have protected yourself by taking the trade at the reversal time with a stop and then lowering the stop to make sure you're okay. Because when these things happen and move like that, anything can happen. And that's why you got to get the stock in the right direction. The right direction of the stock on the daily chart was a long. It was never a short. And we had a whole conversation on this in the room today, and I've said this so many times. Shorting resistance is not a strategy. That's what people wanted to do here. They wanted to fade this and make money as a short. If you didn't know how to play that this morning, you got raked over the coals. And that's why I tell people don't do that. The strategy is the gap. What's the direction of the gap? Up. Is it a good up gap? Yes. How did I know that? I looked at the chart. This was a corrective gap today over this area. Does everyone see that? The stock was a long. It is a long. This is actually a swing core long today for this stock to get in it. That's why the buying also took place up to here. The next target on this is up here. I mean, I actually thought at one point this could run up to 38 bucks today because I was watching. I was like, well, this is just nothing stopping this thing. I'm like, just be careful. You know, 36 wasn't out of the question. It ran up to 35.30, and it's 322. So that's the story for this. And then actually people were going to fade this into lunch. People were actually asking me about fading this. Wait, here. I said, don't fade that. Don't even go near this thing at this point. If you're not long it, the trade is over. Wait for a pullback on the 15-minute, but you never got it. You never got it. You never got it. It never happened. You're not going to get it. It was done. It's just going to pitter off here for the day. You can't short this. It's in a power trend up. It's a bullish gap. I thought it might have a nice buy on the 15-minute, but as it turns out, it was so extended, it just didn't set up right, and it's done for the day here now. It's just going to lay here now until the close. Maybe have one more push up or a little bit push in, but the stock is going to end the day with this kind of monster bar. And this is exactly why you do not go in the opposite direction of the daily chart. Because if you do, at any point in time, like that happened in that 60-second 1-minute bar that happened this morning in the first 5 minutes of the day, somebody could come in that decides to go in the direction of the trend of the stock in the gap, which is a corrective gap today, and do whatever they feel like doing, which is buying. Or if you're in a short and you're trying to buy a short gap, which is the opposite of what you're supposed to be doing, something could happen to run you over like a Mack truck and just wipe you out. And when you also have stops and when things like that happen with that kind of volume quickly, it'll just blow through your stop, blow through it. So that's why you cannot trade in the opposite direction of the daily chart. And if you're trading gaps, then you have to read the gap right to decide, is this a corrective gap that is now changing the trend today to go up? The answer is yes. The stock has been in a downtrend really for the last few months. Today, it is no longer in a downtrend anymore. Take it as it comes. Okay, this gap today has fixed itself, and the chart is higher. And you had the clue back in December, although you didn't know for sure. So you can't buy that gap, and it was a bad buy, even though it had a big bar. But that gave you a clue for the proper reading of it today, quite frankly. You know, if you weren't sure, if you really weren't sure. So this is Melissa with the StockSwoosh.com. This is a review of MW. Bullish gap today that I called very nicely, very, very nicely in the room. And it had a great entry and with a tight stop in the beginning of the day. And I didn't see any risk to reward in any other play in this today. It was aggressive. The thing power trended up after that first bar, just blew through the ceiling. So be careful. Don't fade these. You're looking for trouble. This is a bullish gap, and it worked today, and it was corrective gap, and the entry was long. That's the only way to play this thing. This is Melissa with the StockSwoosh.com. If you're interested in more information or learning how to trade gaps from me, the next Golden Gap class is next weekend, March 23rd and 24th from 9 a.m. to 5 p.m. Contact me for more information at melissa@thestockswoosh.com. Thanks, everybody, and have a great night.